Tell us a bit about how this benefits UAC. Thank you very much for joining us.
I think Wole benefits UAC in a lot of ways. One is the fact that we've got a partner who is global, who's going to bring in a lot of competencies, is going to bring in technology, is also going to bring in financial muscle to allow us to unlock the potentials in our local market. So we'll be benefiting in terms of marketing, in terms of innovation, in terms of skills upgrade for our people, and significantly will be positioned to be a dominant player in whichever category we choose to play in this market.
And then obviously, since you have 51% in this venture, the financials of that venture will be consolidated in UAC's books.
Yes, obviously.
Right. Okay, now give a sense of valuation. How much are we likely to see Tiger Brands invest in UAC, and exactly what's the basis for that investment?
I think it's safe to say at this stage that the consideration for the transaction will be based on the 2010 audited results of the affected businesses. And we do have a fair, transparent process to ensure that whatever we end up with is reasonable and in the best interest of our shareholders. That's what I can say for now.
But what will be the basis? Are we looking at revenues? Is it EBITDA?
It will be EBITDAs. It will be
so multiple of EBITDA.
Say?
Multiple of EBITDA.
Multiples of EBITDA.
All right.
Yes.
And then give us a sense of the timeline. You know, obviously you did say 2010 accounts will be the basis for this transaction. When can we see it completed?
We expect to have closure for this by March 2010.
All right. We look forward to that. Yeah. And you have 5 divisions, 9 subsidiaries. Just give us a sense of how UAC's strategy is unfolding in Nigeria. Obviously, the quick service business is not part of this transaction. That's the business you've had for quite a while. But we do also know that over time, UAC has exited some businesses over the years.
Yeah, it's safe to say that since Unilever divested from UAC in 1994, we have continuously been looking at our portfolio of businesses, and on that basis, trying to look for the necessary alliances and collaborative platforms to ensure that they are winning businesses in whichever industry they play. To the extent that we found that it's difficult to attract the necessary strategic investor into a conglomerate, it is better we restructure the business as a holding company. So each of the businesses can attract the necessary kind of investor that would be relevant to that particular category. So we are actually transforming, as it were, from having divisions within the business to having all subsidiaries. So UACN itself will be more of a holding company with different subsidiaries, and each of these subsidiaries would pursue the necessary alliances and necessary platforms for growth in its category.
So we should anticipate that those 5 divisions will become subsidiaries sometime next year?
Yes, that's one of the resolutions we are actually taking to our shareholders in principle to approve that concept of a new UACN, which is a holding company with subsidiaries rather than divisions, subsidiaries, and associates.
And of course, that shareholders meeting is December 17th.
17th, yes.
All right, let's come back to the transaction. This joint venture, I wanted to get a sense of how you are... Does it have a limit? I mean, usually we see some joint ventures have 5, 10 years. Is this something that is just created going forward, and we will have this as part of the UAC group going forward for foreseeable future?
That's the understanding between the partners. It's more of an evergreen investment into the future. So it is not something that we are thinking of 10 years or 5 years. It isn't. It is an evergreen investment.
And then, obviously, Tiger Brands does have its brands in South Africa. I expect it to be looking to bring in those brands into this joint venture. Should we be anticipating that going forward?
Yeah, part of the benefits of this, it's the products they'll be able to bring, brands they'll be able to bring, and also innovation in terms of consumer research and also market research. So in certain instances where the brands would have significant local equity traction, that would make sense. In some instances, it may well be that we'll take that particular product category and have it done on their local brand, and that may just be it. So there are conversations and discussions to be had regarding that, and I guess we would always take the decisions based on the information and circumstances that we think is the best interest of the business itself.
And finally, let's get your views on the Nigerian consumer market right now. We've seen, GDP is healthy at 7%. In fact, the CBN did indicate that fourth quarter GDP might be as much as 8%. However, there is a sense that that prosperity isn't really filtering into the consumer. What are you feeling on your side as a company servicing consumers?
I think it's safe to say, because we do have a portfolio of businesses, and some of them have significant representation in the consumer category. What we have seen is that certainly revenues are very weak, which is a reflection of the level of demand in the economy. And if you also look at the fact that we haven't had a growth that has stimulated consumption, we haven't had a growth that has stimulated employment, it's safe to understand why we see that happening. I'll give you an instance. I mean, I was speaking to somebody about the last Salah celebration. He used to have people give him 17 rams, and he only got 3. So that's a reflection of the level of consumer spending in the economy itself. So I think things are very tight, I must say. The top-line GDP growth is really not trickling down.